Hey guys, what's up? So today we'll be talking about daily open strategy. So let's get on with it. So first of all, I'm gonna show you guys what basically candles are. I'll just give you a refresher. I'm sure you guys must already know. So here, this is a bullish candlestick, a green candlestick, and so it has four components. This is the, you guys can see my red pointer, right? This is the high. That means that price, but in that day, if this is a daily candle, then in that day price reach that extremity. This is the low. That means price reached that low, that extreme low. Now this is where the price opened and this is where the price closed. So price opened here, must have went down, then must have closed here, must have went up here till here and then closed here. So bullish candle same way around. This is the high, this is the open, this is the close, and this is the low. This is the inverse, open and close, right? So now for this strategy, this is like very important. Basic nuances. For this setup, you should have a good directional bias. A good directional bias is that either your pair is an uptrend or a downtrend, or either it has broken some key support level, key resistance level, etc. I'll get in depth in all this, and I'll show you example as well. It's not going to be whole text video. This is obviously going to have some examples as well, right? So these directional biases can include break of key levels, support resistance levels, failed break of levels, reclaim of support levels, reclaim of resistance levels, etc. So I'll show you an example of what key levels are. So let's say this is resistance, this is support, right? Let's say these are two levels. So price is moving around here, then it breaks support, right? This is a break of support, right? How do I clear this? How do I clear this? What how do I clear this? Anyway, so this is like the break of key level, right? And this is also failed break of levels. Okay, that's it. So what is a failed break of levels reclaim, right? So basically this is resistance, this is support, price goes here, then goes here, and then comes back here and then goes down. It's like a failed break. This part is a failed break, right? That's what it is, right? So retest of high time frame area. Let's say price is moving like this, goes here, retest this and goes here again. This is the retest of high time frame area. Trading trend. So you trade this in an uptrend. This is what, these are the different directional biases you can have, right? So for the most part, one should be aware of not trading the strategy immediately at daily open, right? So from daily open, what it basically means is that we'll have an indicator which tells us where the day opens, right? It will tell us, and you should be aware of not trading the strategy immediately at daily open. So I'll get into depth, of course. So, and here we go. Reclaim of daily open. What indicator to use for this, right? So go to TradingView, open up TradingView, and just go to indicators. Search up daily open. Take the first one by neobutane. Just select this, and then you'll have this. Now what you want to do is, this is very messy. So what you want to do is double click this. Go to visibility, turn off months, weeks, days, and from hours you're gonna turn it to 1 to 3 hours only, right? Okay, and then go to 1 hourly. Then here it's still kind of messy and I don't like it, so you can just go here, go to style, turn off average, previous daily open, and leave this as it is, go here and then choose cross. See, so much neater, right? So this tells you the daily open. So like this, these are the daily candles, right? Because we're on the daily time frame. So now when you go to the 1 hourly, it will show you where the day opened, where the daily opened, right? That's what it will show you, right? So moving on, this is what indicator you got to use. This setup usually takes place on low time frames, right? Because you can't trade daily open on like the 1 day time frame, right? So you got to trade it on either 1 hour, 15 minute, or 5 minute. You can also trade on 4 hours. It's up to you, quite literally, but I prefer these 3 time frames personally. Usually, while taking trades using daily open, you can quite literally see how many times a pair trades above or below and below the daily open in all in many circumstances. So, for example, this is the daily open, right? It goes above, it also goes below, and then let's look at this. It goes above, goes below here, goes above, and goes like this. So it's very unpredictable. Like for example, here as well. For now, we opened here, goes above, goes below, then above, then again goes below. So it you can see how many times a pair trades above and below the daily open in all these circumstances. So what you got to be prepared for is entering a trade more than once, because we're trading on the lower time frame. Your entries might just be a wick for the daily time frame, right? So what you want to do is you're gonna have to, for the most part, enter trades more than one time, unless your entry is like perfect or that's like good, right? So of course, as a discretionary note, the examples I'll show you here are handpicked and are to be taken with a bit of bias towards the strategy working. So let's get into the charts and show you guys with live examples. So entry logic. So what we're gonna do here is, why do you enter, right? Enter at reclaim. Enter at reclaim. Let's look at here. So enter at reclaim of daily open if at support or resistance. Enter at reclaim of daily open at support or resistance, right? So let's open up a chart. Let's go with this one. So as you can see here, the black line is resistance and the blue lines are daily opens, right? So when price reaches this area, we're gonna look for shorts because this is resistance, right? So as expected, price goes up, then comes down. Price comes down. Price goes up, then price comes down, right? Now what happens is, look at this daily close, right? The blue one. Price comes here, then goes down, and then daily opens here and it goes down, right? That means this is acting as resistance. So at that point, what you want to do is put your entry or limit order here, wait for this to retest and go lower. Right? That's how you would enter this. Now one more example I'll show you, right? This, or wait, let's go with this, right? So here, as you guys can see, this is like a support area. This is a very good support area actually, and so price comes here, daily opens, right? Price goes up, then goes down immediately. This is why I told you guys that you guys would have to enter this multiple. You could have to enter this multiple times, right? So daily opens here, and immediately the price goes up. As I said earlier, you do not rate the daily open immediately, because many of the times it goes above and below both, right? So it goes above and below both. So right, daily opens, we know that we don't trade it immediately on the daily open. It goes lower, then it comes back, retest this area. This is where we get in here, and then we long it. And our first profit areas would be here, here. That's it. And we'll get to the stop loss and profit area, exit logic, everything later. I'm just gonna emphasize on the entries here. So you would enter on the reclaim and then it goes up, right? You put your stop here, enter here, price comes back again, goes up. Exactly. So yeah. The support and resistance, I prefer, like these lines which I'm showing you guys, are from the daily time frame, which I use on the 1 hourly. This chart right now is the 1 hourly, but the support and resistance I take from the daily chart. That is important part. I think your setups have more probability of working if you take your levels from a higher time frame and then use daily open on it. So for example, you can use you can use the daily support level and then go to lower time frames. Let's say you go to 1 hour time frame and then use the daily open to put a longer buy there, right? So or else you could enter at key level breakdowns and breakouts. So this is the same thing. You can enter at key level breakdowns or breakouts, whatever. This is the same thing here, but instead of coming back, it just goes lower, right? That is what a breakdown or breakout is. Moving on. So moving on, let's look at where else you can use daily opens, right? You can also use daily opens while trading pairs that are at their all-time highs, right? Because when you're trading pairs that are at their all-time high, you don't really have ranges to play around with, right? So you can use a daily open for that too. Same logic. Let's look at our exit invalidation logic. Invalidation if price comes back to low of the day while buying and high of the day when selling. So, and if you're buying daily open at support, make sure your stop loss doesn't fall at key support, and if you're selling resistance, make sure your stop doesn't fall at key resistance. So this is pretty easy once you think about it. For example, you're entering, you short here, you short at this wick, you short this, right? You short this. So where do you think your stop loss would be? Now, of course, you wouldn't place your stop loss here, right? I mean, it would work in this instance, but if you want a more conservative approach, then you should put your stop loss here. So why would you not put your stop loss here? This is because the black line is also a resistance area, right? So price could definitely come back here and then go back down, right? But if you're shorting here, your stop loss should be here above the furthermost deviation. This is the furthermost deviation from the daily open, right? This is a more conservative approach. This might offer you bad RR, but it is generally the more safer approach. You can play around with this, and you can also use stops here sometimes and here sometimes, a mix of both, and figure out what works for you. But always make sure your stops don't fall in like near the resistance, because it's a resistance area, right? It can come back here and then go back down again, and if you put your stop here, you get stopped when price comes here and goes back down, and then you'll be like, oh shit, price went down, but I got stopped out, right? Wait, one second. Right, so this was the invalidation part, where you would put your stop loss, where you would invalidate yourself. This was your entry logic, and now we're moving on to when to get out. So that's like the most difficult part, when to close your trade, right? So as you're trading intraday time frames, the first thing you should look out for is resistance price. For resistance, price will approach if you're right. Resistance is price will approach if you're right. Right? You want to look out for resistances. For this, you want to you want to oh, 1 second, this is wrong. You want to play around with time frames. I personally use the 1 day time frame for this, but I think any time frame is fine as long as there is clear resistance available. Because we use the support and resistance levels from 1 day and then we traded on the daily open on 1 hour, that usually makes more sense, as daily support and resistance is better than 1 hour support and resistance, right? So here you want to play around with that, look at what is more prominent. If there is a clear resistance on the lower time frames, use that. But if there is not a clear resistance on the lower time frames, then go for daily time frames or 4 hour time frames. Those time frames are usually more clearer and you can find better levels to trade at, right? So exactly that. Anyway guys, that was it. Thank you for watching.